Welcome to everyone. This week's video will cover the S&P 500 for the week of May 26, 2025. Before we start, please read the disclaimer carefully. In my April 14th update, I was expecting the 18-month cycle bottom to form around the third week of May. Due to recent market activity, I will begin this week's update with the monthly cycle. On April 7th, the S&P 500 reached a low of 4,835, approximately 200 points or 4.31% above its 4,639 target. For more precise crossing points and targets, it's better to use the 18-month cycle line equivalent on the weekly chart. Following this low, the S&P 500 rebounded sharply. Because of this strong rally, there is a very high probability the April 7th low. Was the 18-month cycle low expected in May? If that's the case, the 18-month cycle lasted exactly 18 months. 3 facts support this assessment. First, the low stopped precisely on the yellow 18-month cycle trend line, drawn from the 2020 low. Second, the S&P 500 formed its low right on the support line from the previous January 2022 peak, the red horizontal line. Third, the S&P 500 crossed back above its cycle line, confirming the previous low was at least an 18-month low. During the low formation, the S&P 500 missed its downside 4,639 target. Does this mean Hurst cycle theory isn't working? No, it's simply because there was significant bullishness at that time. When the market missed its downside target, it indicates bulls are returning, and bears lack sufficient power to push prices lower. Conversely, when the market missed an upside target, bears are regaining control and bulls are too weak to push prices higher. Then, with high confidence, we can label the April 7th low as the 18-month cycle low. During the rebound, the market crossed above its cycle line. For a precise target price, since the month isn't over, see the weekly analysis. We can expect the new 18-month cycle peak to form around January 2026. When this peak occurs, this will provide an important information about the size of the next correction. If the S&P 500 peaks before December or January, we can expect a significant correction for the next 18-month cycle low. If the peak occurs after January 2026, the correction should be moderate. The next 18-month cycle low is expected between September and October 2026. Technically, during the next 18-month correction, the S&P 500 should cross below its cycle line, providing a downside target. On the weekly chart, all 3 important downside targets from my last update have been fulfilled. The red cycle line is equivalent to the 18-month cycle line. When the market crossed the monthly cycle line, and if the month is not over, the monthly cycle line on the weekly chart provides a more precise crossing point and target. The target for the monthly cycle line crossing was 4,823. On April 7th, the S&P 500 bottomed at 4,835, just 12 points above the target. During the last week of April, the S&P 500 crossed back above its cycle line at 5,509, providing a potential upside target of 6,183. The blue cycle line represents the 40-week cycle. During the recent decline, the crossing below this cycle line gave a target of 5,446. The S&P 500 met and exceeded this target, meaning the April low was at least a 40-week cycle low. Last week, the market traded on its cycle line. Any crossing above this cycle line will confirm the April 7th low was at least a 40-week cycle low, and will provide an upside target. The next 40-week cycle peak is expected by the end of August, with the low by late December 2025, the blue dashed line. The green cycle line represents the 20-week cycle line. The April 7th low met and exceeded its target, confirming the low as part of a higher degree cycle. This 20-week cycle lasted 16 weeks, about 3.5 weeks shorter than the Hurst nominal model's average length of 19.48 weeks. Cycles running shorter than average typically signal bullishness. Last week, the S&P 500 crossed above its cycle line at 5,847, providing an upside target of 6,859, a potential 1,000-point or 17% rally. If the S&P 500 reaches this target, it will set a new historic high. The next 20-week peak is expected around June 15th, with the low by the end of August. We must carefully observe when and where the 20-week peak forms. If it occurs before June 15th, this signals some bearishness entering the market. Should this happen, where the next low forms will be crucial. Technically, this 20-week cycle low should form on its cycle line and find support there. If during the next 20-week cycle low formation, the S&P 500 crosses sharply below its cycle line, this will confirm increasing market bearishness. For the 80-day cycle, due to the Hurst rule of synchronicity, the SP 500 formed his low at the same time than the longer cycle, on April 7th at 4,835. We started a new 80-day cycle on April 7th. The peak for this 80-day cycle is expected on May 11th. On May 19th, the SP 500 make a high at 5,968. Is it the 80-day cycle peak? We will have the confirmation of the 80 days peak, in the lower time frame analyze, the 40 days cycle. On this 40 days cycle, if the SP 500 cross below his 40 days cycle trendline, this will confirm the 80 days peak. In meantime, the next 80 days cycle low is scheduled for June 14th. And the SP 500 should technically find support on his cycle line. The 80 days cycle line will be around 5,600, the purple line. During the rebound, the SP 500 crossed above his cycle line at 5,577, providing an upside 6,319 target, which is a new all-time high, 742 points or 13% of potential profit. The last 40-day cycle occurred on April 7th with a 4,835. On May 1st, the SP 500 crossed above his cycle line at 5,536 for a 6,237 target, 701 points or 12.66% of potential profit. The blue trend line is the 40-day cycle trend line. On May 21st, the market crossed below it, confirming the 80-day cycle peak has formed on May 19th. The last 40 days cycle formed on May 7th and the next one should form on June 13th. At that time, the SP 500 supposed to cross below his cycle line and provide a downside target to find support on his 80 days cycle line. The last 20 days cycle formed on May 7th. At the time of this cycle low formation, the SP 500 supposed to cross below his cycle line. The market made a low above his cycle line without crossing it. This confirmed the bullishness of the market. On April 21st, we already have the first bullish sign. During the first 20 days cycle low formation after a major low, the market should find support on his cycle line. The low form above the cycle line. On April 17th, the SP 500 crossed above his cycle line at 5,286, providing a 5,738 target. On May 12th, the SP 500 met his target for a profit of 452 points in 25 days, or a 8%. The next two 20 days cycle low are expected on May 24th and June 12th. During the formation of these two cycle low, the SP 500 should be below his cycle line. In conclusion, we are expecting the rally to continue, to at least the previous all-time high. There is a very high probability the SP 500 will reach a new all-time high, fulfilling his different targets. The four target to follow are 6,183, 6,237, 6,319 and 6,859. For more details analysis or to know how the cycles works in the stock market, I recommend to visit my website, Tradingmarketcycles.com. If you enjoyed the video, please give it a thumbs up to support my channel. Share it with others, and subscribe so you don't miss any important updates. This concludes this week's video. Thank you for following along. And I'll see you next week with another exciting installment.